Well, the markets are off to the races again today, breaking out here on the NASDAQ at the time of recording. The S&P 500 is testing session highs, and the Dow Jones is also bouncing back sharply here this morning. Stocks are zooming higher after Trump hits pause on his EU tariff threat again. And this morning, we also got some really good consumer confidence numbers that jumped the most in 4 years on trade truce. So the question I think we're all probably wondering, is this one big rug pull? Everyone now seems to be in the camp of thinking that the worst of the trade wars are behind us. But I'm curious to you guys as viewers, what do you think? Drop a comment down below and let me know. Do you think the worst is behind us? Do you think markets are going to continue to rise? Or do you think this is not over yet? And I wanted to also share my opinion on this because I think that this is an interesting story. The market has been consistently playing gotcha to the bears for the last several weeks. Like, for example, in early April, when bears got really scared and bought a whole bunch of put options just to watch the market melt up following that. Since then, pretty much every overextension on the put to call ratio, suggesting that puts were trading at a premium level, has been a good opportunity, at least with hindsight in our favor, to actually buy the dip on stocks. We see the same thing happening right now. And still, I am a believer that dips in this market are buying opportunities as people tend to overreact to what Donald Trump says. Now, again, that is not a statement as to whether or not I think Donald Trump is a great president or a great guy or anything like that. It's just a tendency for the way he negotiates. He's a hardball negotiator. He throws a punch first and then he offers some band-aids after, right? That's just his style. And we've been seeing that consistently here for some time. And so as market participants, we kind of have to adapt. In fact, on Friday, when I bought the Russell 2000 index, I made the point that everybody was freaking out about the European 50% tariffs and clearly signaled that I think that that is going to get walked back. And now I also see people in my comment section blaming Trump and all upset about, oh, he's rug pulling, he's helping all his friends get rich and all this sort of criticism. But I just want to say, regardless of how you feel about that, maybe that's a valid criticism. I'm not saying one way or the other, but the reality is that if you're trading this market, at the end of the day, adapt to the environment that you're in. Don't obsess or complain about what Trump is doing as a way to kind of excuse bad trades you're taking. Adapt and take ownership of the market environment that you're in, not the one that you wish you were in. So I remain steadfast that pullbacks in this market are opportunities, in my opinion, to buy the dip. And I've been doing that since the sell-off, actually too early. I started buying stocks over here, added more here, and added lots more around the lows. So while I didn't time this thing perfectly by any means, this has been one big buying opportunity in my personal view and still is a buying opportunity simply because I think people don't know how to react to Trump appropriately. He tends to, like I say, punch first and then negotiate afterwards. I also wanted to show you a cool project I worked on this weekend with the EdgeFinder. It's our EdgeFinder score indicator, and it shows you the historical score reports, bullish or bearish, on the selected chart. So I've selected the NASDAQ here, and you can see the price action of the NASDAQ up top and the EdgeFinder's relative score during that same time. So you can see for a little bit there, we were very neutral on indices. But then once we got into around March to early April, we got a little bit of a bullish signal and then a very strong one here starting in April 15th, which, by the way, you can see on this chart, it was actually a really good, strong signal here for things like the NASDAQ and S&P 500. So we still have a bullish reading at this time. So I am still personally looking for technical setups that marry up with my strategy to look for more longs. So if we do get a pullback in the NASDAQ, I'd be interested around the 20,400 level to 20,000 as an opportunity to look for long positions there. And I've isolated just the indices on the EdgeFinder to see the scoring, and you can see pretty much all of them are getting very bullish or bullish ratings on the EdgeFinder's score, which takes into account sentiment, technicals, and the economic data. So most of our indicators are suggesting more upside for indices, and not just US indices, but also things like the DAX, the Chinese stock market, and the FTSE. So when we look at the S&P 500, we did already bounce off of this area of support around 5,800, and also the Dow Jones did bounce around this 41,200 level. I personally went long the Russell, which is actually leading the charge higher today, up about 0.68%. Not so bad. I went long on Friday, like I said, after the big kind of shocker news cycle. Oh my gosh, Trump, 50% tariffs on Europe, and then walked it back right away, like we kind of expected him to do. Now, again, the market does not. The market, freaks out and it's like, oh my gosh, it's all ending. And then, again, those in recent times have actually actually made for a very good trading year for me because those freak out events produce some really great entry points. So on the Russell, you can see we tagged into a daily chart level of support, and I went long shortly after we started to reject. I do think that we have potential to break out and even resume back towards those all-time highs on all major US indices. Gold's down 1.3% here today, and I do think that this one, I've been saying this recently, is due to range bound for a little bit. I don't have a strong bias one way or the other on gold at this time. However, the long-term trend still remains intact and looks really strong. But you can see the EdgeFinder is giving me a neutral reading on gold, so no trades for me. Looking at the put to call ratio, still very neutral specifically for gold. Here's a 4-hour chart that I thought was interesting and shared a markup of in our Telegram channel. So you can see I marked it up in our group here as we tagged into this area of resistance. I mentioned my neutrality on the gold situation where I don't really see too much upside or downside. I also wanted to just remind everybody, if you haven't entered for a chance to win our free giveaway, step 1, join the Telegram channel linked in the description down below. Step 2, enter for a chance to win a free membership with us. This is a lifetime membership where you can see all the trades that I'm taking, as well as the fellow traders here at A1 Trading. We have Alan Perez, and we have Ivan sharing their trades inside of the group. So all you have to do is enter for a chance to win using the link in our Telegram channel, and we're going to be selecting a winner on Friday. So like I said, join the Telegram channel, enter your name, and good luck. Also, if it's easier and you're watching on a television right now, you can scan the QR code that's on your screen. That should take you to the Telegram channel if you haven't already joined. So gold is definitely at a deciding point here because we are back to a level of support looking at this 4-hour chart. I'm very curious to see if we are going to kind of break lower and just head to the lows of this channel once more, or if gold actually can break out. But as I signaled earlier, I am very neutral on this chart, so I really don't have a strong bias one way or the other. I'm just curious to see how price action reacts to this level. Taking a look at the dollar index on a daily chart, we are getting a little bit of a bounce back here as we close in pretty close to that previous low here. Dollar has lost a lot of value here in 2025. You can see down, 9%. Give or take, which is a pretty big move for a currency. I do think, however, with the dollar, I am also pretty neutral on this one. I'm neutral on gold, largely because I'm also neutral on the US dollar. When we look at the US economic heat map, the reason for my neutrality on this is because our indicators are scattered. We have some things that look really strong for the US, like stronger than expected PMI numbers, but then we have cooling inflation, which is bearish for the US dollar. At the same time, we have job openings data, which has come in a little bit soft. We had ADP that was soft, but then we had NFP, which was strong. And so sometimes people wonder, Nick, why are you so neutral? And this is the reasoning behind when I choose a direction, it is not based on the technical chart whatsoever. The direction is primarily focused on the economic data and the bias that is being generated from it, because that's going to kind of be the wind in our sails. In this case, there's no wind. I mentioned the DAX. Look how strong this chart looks, breaking to yet again fresh highs on this announcement of pausing the tariff stuff with Europe. Silver's also looking really range bound. We have some resistance up ahead, and so don't have a strong bias on this one either. A trade that's come back to life for me a little bit here is the dollar yen longs that I have as of about a week and a half ago where I entered this trade. We've got a nice little bounce happening on the Japanese yen today, or I should clarify, a bounce in currencies against the Japanese yen, as specifically targeting the JXY, which is the Japanese yen currency index. You can see it's down on the day. I also have a long position on the NZD, or the Kiwi dollar, versus the Japanese yen, which is bouncing back a little bit as well. On the currency front, here's the latest economic surprise meter readings for all major countries. In terms of economic performance, our strongest ones recently relative to their economic projections are things like New Zealand, Australia, the UK, or the British pound, and our weaker currencies are going to be things like the euro, the Japanese yen, and that's pretty much it. Neutral readings would be for the US dollar, the Canadian dollar, and the Swiss franc. And what is this based on? Well, within the EdgeFinder, we have our economic heat maps. And what you can see here is that for each country, we have a select pool of data that we build biases on and generate these things for our users. If you'd like to try out the EdgeFinder, there's a link in the description down below to where you can find out more information about our 30-day trials. They are not free, but they give you the option to try the tool out for a fixed amount of money that gets credited towards your final purchase of the tool if you decide to get it. For more information, click the link in the description. Bitcoin is holding its gains back around 110,000, and oil prices are lower today. This chart really looked like it was going to give me some upside trades, but didn't quite ever really break out here. I've been looking for this downward trend line to break for a possible bullish confirmation, which still could happen, but I really need to see some decision from the bulls, some decisive price action to the upside, and then we could move higher. From a bigger picture perspective, I do like the idea of being long oil because I don't see the world economy falling apart anytime soon, at least based on the economic projections and indicators that I use and look at. Right now, it doesn't seem like a very likely scenario. So I do think that the demand for oil remains supported, and I think that there's an opportunity for prices to rise from here. That being said, I need price action to confirm that idea in order for me to take an entry. Bond yields are a little bit lower today. TLT is bouncing back, was starting to get a little overextended there. Bond sell side was going heavy, and now we're seeing a little bit of a bounce back this morning. And we've got a beautiful chart when looking at the British pound. This thing looks so good, and I'm definitely a buyer if we can get some pullbacks, as long as the EdgeFinder confirmation is still there. Take a look at our UK economic heat map, and you can see most of our indicators are suggesting bullishness for the British pound. And today's video is sponsored by Vantage Markets. Vantage offers some really competitive, low trading costs on their platform. They offer copy trading, and they also offer a significant welcome bonus to viewers of my channel. If you specifically use the link that's in the description of this video, you can find out more information about the welcome bonus that they're offering traders that are outside of the United States. Unfortunately for US traders, CFDs are not available to us, but for those outside the United States, explore the welcome bonus using the link in the description down below. Did you know, you guys, you want to hear something crazy? If you go into $100 with $100 into Walmart, I want to ask you guys in the audience a quick concept. If you go into Walmart and you spend $100, how much do you think Walmart profits off of you spending $100 at their store? Does anybody want to take a guess? I'm just going off of their profit. Now there's a lot of accounting stuff that makes this a little bit harder than what I'm going to say, but I'll tell you this, their profit margin, which we can pull up just for fun. If I go to Walmart, it's a publicly traded company, so you can pull up a lot of this information. Their profit margin, where is it on here? Here it is, 2.7%. So if you go to Walmart and you spend $100, the oversimplified amount of money on average based on all their revenue, they make $2.70 for your $100 that you spend in Walmart. People do, like, the perception of like what it costs to run businesses is very, very expensive, right? So people think I'm giving $100 to Walmart. Well, really, after all the costs, the labor, the stacking the shelves, the negotiating with vendors, with all the real estate costs, $2.70, right? So if you're making 100K in revenue for a company, that is like absolutely tiny, because businesses are expensive to run. Some of the better companies, well, some of the amazing companies that we know, this just to contrast that. Now, obviously, that's retail, which is a very low margin type business, high revenue, high amounts of volume. But then we could take a look at, for example, like, let's do Microsoft. This one's kind of fun to look at too. So if I'm looking at Microsoft, this is a company that operates on very high margins. Look at this, 36, 37%. So in that case, you spend $100 and they're making 35 off of it. That's really high. It's not perfect because there's also like some accounting strategies and expense writing and reducing their net profits in terms of accounting that they do, right? There's many strategies they do, but it's just more, the point is profit margins are much thinner than a lot of times people think, especially for like really big companies like a Walmart, whose primary objective is to like squeeze prices lower to take up all the business, right? It's an interesting strategy. But yeah, so what it does, right? Why take such a small cut? Well, and that's why everybody goes to Walmart, because their prices are so good relative to most. So it squeezes out other people from threatening to take their business. I mean, I go to Walmart all the time. The prices are just so good. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.